question that I'm asked quite a lot as a mortgage broker is whether or not family can gift money as a deposit for my mortgage, and the answer is absolutely yes, they can. Typically, a lender is going to look for your deposit to be money that you have saved up or accumulated yourself. But family and friends can absolutely gift either some or all of the deposit funds to you, either in cash or in equity in property. So there's a couple of scenarios here. One thing to bear in mind, if it's a cash deposit, whether it's money that you've saved yourself or it's money that friends or family are gifting, money laundering regulations mean that the lender or your solicitors are going to need to see 3 months evidence of where that money's come from. And that can mean multiple bank statements if it's moved from, say, a savings account to a current account within that kind of 3-month span of time. So in terms of preparing for your mortgage application, one of the things that you will need to bear in mind is evidence in that deposit and the route of the funds. But certainly friends or family can gift money. It's quite common for parents or grandparents to give a helping hand, whether that's towards the deposit itself or towards the fees, the solicitor's fees, for example. And typically all a lender is going to look for is a declaration to be signed by the person making the gift to say that it is a genuine gift. They don't have any kind of interest in remaining in the property, and they don't want the gift repaid to them. Yeah, absolutely fine. The other scenario is if your parents, grandparents or close relatives have a property that they are in a position to gift to you, then equity can be used as a gifted deposit as well. And a common scenario for this would be where, say, parents have got buy-to-let properties and they decide that they're going to gift one of these to you. The property is worth, say, £120,000. There's maybe £80,000 of a mortgage outstanding on it, and the parents are gifting you that property for the amount of mortgage that's outstanding. So the remaining £70,000 becomes your deposit, and that's either termed as being a concessionary purchase or a gifted equity purchase. Same thing basically. There's a couple of issues with how that's recorded on the land registry, but that's something for your solicitor to deal with. But most lenders will look at that as being a perfectly valid way to acquire a property, and in many cases then the equity becomes your complete deposit. Some lenders will look for you to put in a small amount of cash deposit yourselves, typically the specialist lenders, but in general you can use that equity as your entire deposit. Your last scenario that you can look at when it comes to deposits is if you're buying from your landlord. And again, it's quite a common scenario at the moment. There's a lot of landlords are selling up to exit the industry. If your landlord's generous enough that he's giving you a bit of a discount against the open market value, there are some lenders that will accept a landlord gifted equity as deposit as well. So again, might mean that you have to put in a small amount yourself, but if the lender's prepared to accept that towards your deposit, it will significantly cut down the amount of money that you need to put in. And even better, it means you get to stay in the house that you've maybe been in for quite a while. So a little bit of information. Any questions you have, put them in the comments. We'll try and answer off anything that you want to ask. But otherwise, good luck in your journey.